Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet. All Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin not zero, and we have another great episode for you today. Natalia Li from Galaxy's public policy team will join us, and we're going to break down some of the big crypto regulatory developments that have happened recently, like the president's executive order and the presidential working group, Hester Peirce's cataloging of what crypto things the SEC is going to work on, and a fascinating press conference that David Sachs had with key members of Congress on Tuesday of this week. We'll also check in with our good friend Beimnet Abebe from Galaxy Trading, as always, and we're going to talk about tariffs, their impact on the market, and their broader impact and crypto's reaction. Before we get to that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. A ton is happening very quickly in this space, so this is a very timely episode. Let's hop right into it. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome back to Galaxy Brains.
Thanks for having me.
What if we continue to be a volatile market? I feel like it's almost every week now this year so far. We've been like, oh man, everything nuked, and then came back. And then we've been in this range from like 98, high 80s to all-time high of $109,000 in Bitcoin for almost 2 months now, sort of just chopping around in there. But let's not talk about all of that. Let's talk about what was this week's panic sell over the weekend. Nothing was open, and a lot of tariff conversation was had by the president.
Yeah, no, essentially Friday afternoon, tariff chatter picked up from the standpoint that they were going to go effective shortly after Friday. And so the market latched onto that, and there was really nothing to trade because a lot of the stuff was kind of around the close of the U.S. session. And so crypto traded heavy this weekend, and then you got to the point where there were a ton of liquidations that happened, particularly in ETH. It saw a move down to, call it roughly 2,100 on the back of some very aggressive liquidations, and that dragged the rest of the crypto complex with it, particularly a lot of alt tokens, and so it was just risk off. There's nothing to trade except crypto over the weekend. Risk off into thin liquidity. And realistically, I think in terms of the positioning of the market, there's a lot of length that was in the market and that still is in the market that is based on the thesis that the administration is going to eventually purchase crypto. They're going to have events and catalysts that will drive crypto prices higher. And so when, the broader market takes a hit based on Trump policy, it gets a little bit more difficult to hold on to those longs. And I think there's just a lot of folks that are a little bit over their skis in terms of just how much length that they've put on, particularly in some of these alts. And so, you had a market where the marginal price that people were willing to pay for tokens was a lot lower, and the market, reacted to that, and markets move at the margin. And so if people got really bearish the market and the price that people are really willing to transact that is like 20% lower, like tokens will move to 20% lower.
Right.
And that's what you've seen.
Yeah. And Bitcoin recovered.
Yeah.
So Bitcoin went all the way down to like 91.7, I think was its bottom wick. The ETH was like a bloodbath.
Yeah.
ETH BTC went down to new
Fresh
cyclical
trend
lows.
Yeah.
I think 0.026 area, well below 0.03 now, and frankly not looking ready to recover yet. Bitcoin, though, did by Tuesday recover all the way to like almost 102, maybe 102 handle we saw, leading into David Sachs's press conference with the committee chairs from the House and Senate banking, finance, and ag committees. which we'll talk about in a second. But most of the alts didn't have that same recovery. And so as a result, you've seen ETH BTC stay lower. You've seen Bitcoin dominance at basically like
bull market highs.
Yeah,
type of thing.
I mean, almost like the highest that it's ever been in a bull market. It's 61.2%. A couple of crosses like Sol ETH, which is like when that goes up, that means Sol is gaining ground on ETH. Whereas it's the reverse with the Bitcoin cross, doesn't really matter. That's fresh highs or trend highs. But yeah, most of the alts did not recover at all the way Bitcoin did. Does that tell us the same thing? We were talking a lot about this last week.
Yeah, I think one, it's a function of supply and demand. And there's a ton of supply in these tokens, whether it's from vesting, from inflation schedules, from folks that are on teams trying to, sell some tokens. And
coin explosion.
Demand is really there for new tokens at low market caps, and not there as much for more established tokens, especially ones that are like relatively large. And so, when there's more supply than demand, like prices need to move lower. And I think it's totally reasonable what happened because, I like every day I've been doing this exercise. Maybe it's wrong, maybe it's right. But I go home and I ask Perplexity, like, what are the companies worth $30 billion? What are the companies worth $100 billion? What are the companies worth $10 billion? And you look at them and you're like, wow, these are like industrial juggernauts that have been around for decades that produce, literally like $1 billion in revenue per year.
And really important things.
That also have optimistic futures with deregulation and things of that nature, and AI, blah, blah, blah. And so when you compare that to these tokens that, don't necessarily have that outlook, it's really hard to justify some of the valuations. Now, again, I'm a believer that, market dynamics are the most important. And so, I think that's left people a little bit more cautious, I would say, about, purchasing some tokens at really large valuations. And, that's kind of what's playing out in the market. And as far as I know, none of this supply is slowing down. People are still launching like thousands, if not millions of memes every day. There's still a ton of inflation in lots of protocols. And every day, like it's like a new ETP provider filing for
which will be more supply.
A levered ETF or a different token ETF or, et cetera. And so it really is, there's just too much going on.
Please, sir, no more,
for the amount of people that are interested in buying some of these assets.
Yeah, I hear you.
And I'm not shocked. And back to what we said last week, it's like the protocols you want to engage with and invest in are the ones that are seeing real adoption, real growth, new stable coins, new use cases, that, have a strong team behind them. And you want to kind of avoid the stuff that is showing less traction.
Yeah, that makes a lot of sense. Let's talk about David Sachs's press conference.
Absolutely.
Before we because this was the sort of crypto market event on Tuesday. We're recording Wednesday, February 5th, but on Tuesday, February 4th, yesterday, the White House's crypto and AI czar, David Sachs, went to the Senate to give a statement in a live press conference with the chairs of the four most important committees for crypto regulation. That's the House Financial Services Committee and the House Agriculture Committee, which oversee the SEC and CFTC respectively, and then the Senate Banking Committee and the Senate Ag Committee, which in the Senate oversee the SEC and CFTC respectively. So it was a bicameral, both houses of chambers of Congress. It was also a multi-committee.
Is it cameral or cambrial?
I think it's camera. I'm not sure.
All good.
Look that up for us, Phineas. So both houses, both jurisdictional committees, and also both branches of government, with David Sachs representing the White House. And it was a press conference about how they're going to work really hard and together to make America the digital golden age of crypto. But Bitcoin, using that as a proxy, went all the way up to almost 102 leading into it, but then sold off back into the 97 range where we basically are now. Did they think that David Sachs was going to say the Pledge of Allegiance with his hand on the Satoshi White Paper?
Again, crypto just always trades like buy the rumor, sell the news. And, no matter what he said during that, like I would have bet that crypto was going to go down after.
Yeah.
Because, ignoring the short-term price action, I do think the imagery alone is notable.
I think it was historic even.
You've got a czar, crypto czar, meeting with some of the most important committee chairs, bicameral, et cetera. Like, that's a big deal. The stuff Hester Peirce put out, that's a big deal. The FDIC announcement about, allowing banks to do more crypto activity, that's a big deal. SAB 121, that's a big deal. So you're getting a lot of good things out of this administration, and you're getting it really quickly.
Yeah.
And I would say that the tone that David Sachs took with respect to the strategic stockpile or the sovereign wealth fund and Bitcoin, he didn't dismiss it. And that...
I think this was maybe the most interesting for the market, although it still, of course, was a sell the news kind of thing. He didn't say national digital asset stockpile only, which is the language in the executive order that a lot of people hoping for something more or something more Bitcoin specific had wanted. He was very clear. He said, we will look at a Bitcoin reserve or digital asset stockpile, the potential creation. So they're evaluating, by the way, did not commit to either.
Yeah.
And then later he went on CNBC 2 hours later, it said the exact same thing, Bitcoin reserve or digital asset stockpile.
Yeah, and
he's very clearly signaling to the industry. He knows that the industry knows that those are sort of two distinct ideas, and he's saying they're both on the table.
No, and I would put a pretty high delta of Bitcoin going on the U.S. government's balance sheet in a more aggressive way at some point this year.
Yeah.
Right? Howard Lutnick is the guy in charge of the Sovereign Wealth Fund.
By the way, it was in response to that question with Treasury Secretary Scott Bessent. Yeah, sorry, I didn't mean to interrupt. But and that was the first part of his answer to the question was actually, would they put it in the Sovereign Wealth Fund?
Yes.
And he said, I don't know, you're going to have to ask Howard Lutnick about that.
Yeah, and yes, correct.
And if you go back and watch Howard Lutnick talk about Bitcoin, I mean, I'm just saying, it seems like he really, really likes it.
I mean, this is the same administration who launched a meme token. They will literally...
They're pro-crypto.
They're very pro-crypto.
Yeah.
And the language I've heard from Scott Bessent around Bitcoin as well is not concerning in any way. He thinks that, Bitcoin doing well promotes wealth creation in the younger generation, and he sees it as a reasonable thing to support.
Yeah.
Right?
Yeah.
And so I think that the administration, I'd put a very high delta on them actually putting Bitcoin in the sovereign wealth fund or making meaningful change to the government's Bitcoin policy. And that is incredibly bullish in the long run. And so it's really hard to separate these short-term market fluctuations from the ultimate state of what the U.S. government's policy stance is going to be with Bitcoin, which seems like it's going to be incredibly bullish. Yeah, it does. And so, while we are dealing with a lot of volatility, and that generally is not comfortable, I do think that this volatility presents an opportunity to accumulate more at good levels. And so I think for my outlook, near-term outlook, Bitcoin's still a range trade, call it 90K to 108. And, at the bottom end of that range, you're probably meant to buy because I do not see this administration not being aggressive with their Bitcoin policy. And I think you just have to kind of time it because, the sovereign wealth fund assessment is going to take 120 days for them to come up with recommendations, right?
Yeah, we don't get that report until July.
Correct. And then David Sachs's thing is...
Oh, sorry, the David Sachs thing we don't get till July.
And that's
180 days. You're right.
I think it's 90 versus 120, but whatever it may be, you will get substantive policy recommendations that are going to be pro-crypto. And I don't see why the administration wouldn't do it. They're trying to abolish the Department of Education right now. They're doing so many things that may seem unconventional, but to me, it just highlights their capacity and willingness to push boundaries.
Yeah.
And I think crypto is a place where they will continue to do that.
There you go.
So yeah, I'm bullish Bitcoin,
time.
But with the rest of crypto, I'm a little bit more cautious. I think, I'm much more comfortable being in Bitcoin than any other asset.
There you go. My friend, Beimnet Abebe from Galaxy Trading. Thank you so much.
Thank you.
Let's go now to our guest, Natalia Li from Galaxy's public policy team. Natalia, welcome to Galaxy Brains.
Thank you. It's great to be here.
Yeah, it's such an exciting time in policy and in crypto policy. We've got a bunch to just talk about. There's been a bunch of developments even this week. Our audience will know a lot about these issues in general from following the space, but also from listening to Galaxy Brains. We talk a lot about Bitcoin and crypto regulatory policy on this show. And it's been quite several months, of course. But let's start with you, Natalia, about the crypto executive order that now President Trump signed 2 weeks ago, I think, at this point.
About 2 weeks ago. That's right.
What's your takeaway from this?
Lots of positive on net things happening in Washington right now. Obviously, this highly anticipated executive order generally reflecting sort of framing of digital assets as a national priority for this administration has been huge news here. Sets policies like protecting self-custody, promoting the US dollar dominance and sovereignty, sort of banning CBDCs, lots of great stuff on regulatory clarity as well. I think what's helpful here to sort of frame the conversation is obviously like this executive order came with a revocation of some of the Biden executive orders on digital assets that came previously, as well as the international framework that they put together back then, which is in general, if you think about it, like a strategic pivot by the administration, again, prioritizing domestic sovereignty sort of over global cooperation and other priorities. But I would also say, like, from an operational standpoint, if you think about it, this executive order is, over 10 agencies, heads of executive agencies, setting up a new structure and then setting up some really, really ambitious deadlines for the group, right? So if you can think about it as a coordinating body on one hand, but also if you think about it, it's also a little bit of a regulatory sprint here. So, the government will like to say this is kind of embodying a whole of government approach, and this is what it's kind of truly what it's doing. It's setting up a formalized structure for the agencies to work through in a collaborated, sort of coordinated manner, but it's also setting up some really aggressive strategic deadlines, right?
Yeah.
So if you think about it, February 22nd, actually we're tracking as their first big deadline. That's like 30 days from the executive order issuance.
Which is only like 17 days from today.
Yeah, February is a short month. People forget, but also government moves at its own speed. And so the fact that there is some strong messaging on deadlines is, telling me that.
And I didn't mean to interrupt. What happens February 22nd?
February 22nd is when all of these agencies are supposed to produce like a comprehensive list of items that impact digital assets. And then basically do a review and stock take, right? So what is out there? How do we as agencies influence this space? What out of these orders they have to be keeping in mind what out of these orders is potentially, or regulations in this list is potentially up for rescission, modification, regulation, like what is it out there that we have our influence on currently? And what should we be thinking about modifying it, right? So that's big. I would also say, like, before we go into even this particular deliverable, like, think about where we are in administration. A lot of these agencies either have agency heads that have just been confirmed and are just getting to these agencies, literally staffing up as we speak, like building an airplane as it's taking off, getting staff in the door, getting themselves in the door, right? Like finding where their little office is in these huge executive buildings. And then some of these folks are still waiting confirmation, right? Like Russ Vought from OMB, who's in this group, actually has not even been confirmed yet as of the time of this recording. So I think that's,
nor has SEC chair nominee Paul Atkins is not in the seat yet.
That's right. So the SEC and CFTC, they have sort of acting structures in place, which is very typical for independent agencies to have. But, a lot of these executive agency folks are just not there yet, or just getting there. Mm-hmm. And if you think about a department like Treasury, where I come from, that's over 100,000 people between the bureaus, the headquarters, all the different components of it. So just think about this like huge government machine, right? And then, not to pile in even more, but right now, as we speak, there are lots of different priorities for the administration, right? Other than just crypto, outside of just crypto in the government. right? There's a huge immigration debate that's happening. There's actions on all kinds of, tariffs, border.
Right.
There's lots of public policy things happening.
Crypto is not, you tell me that crypto
No.
regulation is not the number one priority for the U.S. government?
It is for us. It is for us, but
Right.
not a lot of times not for all these folks that are going to be in these working groups, right? So I think that's where rubber meets the road here. So to me, this executive order really, again, just driving and signifying these like really aggressive timelines and deadlines should be interpreted by the sector very favorably, because this is just really setting it up as a priority.
So first they take stock and they say, I'm say the Treasury Department, right? Like these are the various issues that we know we have control over, whether it's say like OFAC sanctions or like, BSA compliance. Or many others probably, right, that we could brainstorm. But like just these are – now we have a giant list of things that fall inside our jurisdictional regulatory remit and that we think affect the digital assets market. That's the sort of first thing they have to do, right?
That's the first step, yes.
And then they have a follow-on. What's the next thing that they have to deliver to this group?
That's a great question. So within 60 days of this executive order,
so they have 30 more days, 30 days from February 22nd.
That's right, which puts us to March 24th, 2025, right? So then they're supposed to take these, take the actual list that they came up with, and then they're supposed to submit recommendations to the chair, right, to David Sachs, on whether specific regulations or guidance should be rescinded, modified, or whether something else new is needed, right, into the regulation. And so this is like, if you think about it, it's a pretty typical process. First, you take a stock take of what you already have, what you're working with. And then as your next step, you're thinking about like, how do we modify? Do we need more? Do we need less? From an executive agency standpoint. And again, think about the 10 or 11 involved in this process. Everyone's going to be looking at their remit and then potentially collaborating and coordinating with each other where they share jurisdiction, right? So I see like a lot of interplay between like DOJ folks, FinCEN folks at Treasury, like they would be talking because they're both law enforcement. There's lots of like touch points there. So if you think about it also, that really initial stock take kind of sets up the tone for what you are going to be recommending in terms of like either new guidance or rescission of that guidance. I also think like at this stage of work, it's pretty fair to expect some really robust industry outreach, because this is where, again, real frictions start to come up. And this is where you also need input from the industry, which, by the way, is already happening, right? Like all of these agencies have advisory groups where industry is sitting on. And we are obviously all aware of this process, and we're providing our input and we're providing thoughts, right? Like a formal, informal basis, whether it's an formal advisory group, whether it's just conversations with agency colleagues and staff on like what's needed, what's the subject matter expertise that is required, what are we missing, what do we want type of thing. So that's the general process. And then what happens is sort of as the final, a bow tie kind of piece for this is then these recommendations get submitted to the chair. And then the chair takes them, and then the chair and his organization at the White House, right, they only have about, I want to say 80 days to come up with, a comprehensive report. Actually, I think the actual deadline is July 22nd. So within 180 days of the original issuance, they are supposed to come up with the comprehensive report.
So they synthesize what all of the agency members of the working group have said. We think these are important, and these are our recommendations about what to do with them inside our jurisdictions. The committee chair, David Sachs, and some team presumably or something, they smash them all together, get consensus among the groups, organize it all into a formal report for the president, right? So
That's
think
right.
that's likely to be public, right? When that final thing comes. Yeah.
That's right. And I think it's fair to expect that there will be a lot of deliberations, there will be a lot of industry outreach and input and coordination, but really the public piece of this work will likely culminate with this comprehensive report. It is supposed to be submitted through the NEC, and really the two main deliverables there is the proposal for a federal framework, a regulatory framework for digital assets, And the second one is the evaluation of potential creation and maintenance of the national, what they call the digital asset stockpile, right? So like, think about both like high level regulatory with some prescriptions, obviously, because they will have to fight a lot of fights there between the agencies. They will have to mediate. They will have to do a lot of coordinating and synthesizing, like you said, and like really just like herding cats and dogs there on like what the actual legislative framework should be. And then more of a operational piece, right, with some policy baked into it, is the actual stockpile. So what that would look like, what's the asset composition, et cetera.
So let's talk about the stockpile in a second more. But
Yep.
I want to ask you, stepping back, high level here, these types. One of the Biden EOs that this rescinded, or the one, was Biden's own effectively presidential working group on crypto. The president set these up sometimes to do a process like this on an issue. How long do we expect, does it to be relevant? Like, does this, after they deliver that report to the president in July, does the working group remain intact for the 4 years or do they typically dissolve? Or how would you think about the long-term impact of that group after they give this ordered deliverable?
Yeah, that's a great question. I think it depends what they come up with, right? So I could see this going potentially two ways. Typically what happens is these types of groups get stood up for really what I call like a regulatory sprint, right? You need something fast, you need something very specific, you need to be able to wrangle those different stakeholders in the room, and it's a very like action, deliverable oriented type work, which again happens in a kind of a sprint, both timeline and format. And so once that's down, once the report is received, what's usually is kind of remains of the group is, a couple of core agencies, right? Leads, whether it's, in this particular case, whether it's Treasury, whether it's at the White House, wherever that sort of legacy body kind of remains. You absolutely don't need to keep all 10 agencies at all times on call. They are on call, to be honest with you, anyways, for the president, right? So like you already have ongoing regulatory coordination and conversation that's happening just like daily with the agencies. So there's no need to keep this formal structure. And so in that case, to an extent that there's follow-up work on the legislative side, which I almost 100% anticipate will be happening, that sort of legacy body would be the one to then further drive consensus, collaborate and communicate with folks as necessary, bring them to the table to resolve sort of specific spot issues. The second way this could play out is if there is, somehow no legislation, or if there's no outcome that this particular group is happy with, then that could be, maybe there could be a follow-up. Maybe there could be a potential sub-working group, right? Or if there is potential work that hasn't been, completely put out there, you could have a working group or a sub combination of agencies, for example, that would continue to work on illicit finance issues, right?
Yeah.
Like if there's something further down that we kind of want to explore.
Got it.
But I would say typically it just so happens so that these formal collaboration bodies kind of tend to quiet down in favor of just like one stakeholder driving that future work.
All right, let's talk about super interesting. And by the way, I encourage our listeners to compare the 2022 Biden presidential executive order on crypto to the 2025 Trump presidential order on crypto, executive order on crypto. Very different. I'm just going to throw that out there. Very different. And also we know what the outcome later of the Biden presidential working group was, reports saying Bitcoin mining was bad for the environment. That ended up becoming a policy recommendation of a 30% VAT tax on Bitcoin mining in the president's budget proposal. Of course, did never come to fruition, but these things do result in policy, although they can't create law by executive order. They do result oftentimes in very concrete regulatory changes or legislative proposals. So compare those two. I think you'll find that it's a strong marker of the very different and much more supportive approach to digital assets that the current administration is taking.
Yeah, absolutely. You can even compare the agency composition, right?
Yeah.
So, and you can compare the number of executive orders that came out of the Biden.
Let's talk about the agency composition, because one of the incredible I'll even say victories that has emanated, a second order effect from President Trump's victory, has been the significant elevation of Mark Uyeda and Hester Peirce at the SEC. And we'll talk about the David Sachs congressional press conference also that happened yesterday. We're recording on Wednesday, February 5th, but on Tuesday, February 4th, there was this conference, which we'll talk about in a minute too. But I think the biggest news of Tuesday, February 4th in the world of crypto was actually this statement put out by Hester Peirce. So for background, Gary Gensler resigned as chair on January 20th. Another commissioner also resigned. So you've got currently in the seat a quorum, and barely a quorum to operate, but you've got Mark Uyeda and Hester Peirce in the majority. And is it Crenshaw that's still there on the other side? So Crenshaw in the minority, quote unquote. And Mark Uyeda has been made acting chair by President Trump until Paul Atkins, his own nominee, is confirmed, which we think will probably be in March, April, May, sometime in that big giant time period.
Typically spring, yes.
So in one of his first acts as acting chair, Mark Uyeda created a SEC crypto task force to broadly figure out everything that the SEC should be doing differently on crypto. And he named his co-commissioner, Hester Peirce, the head of that effort. And she, yesterday, on Tuesday, February 4th, released a pretty long statement about everything they plan to do. And she didn't say what the outcomes of these various reviews would be necessarily, but it's a pretty, right, she uses hedging language and stuff about, we'll look at the potential. The number one, and there's a list of 10 bullets, and number one was, aggressively think about basically how to apply the securities laws to tokens, right? It's like the Howey test, effectively. How should we interpret to that? And then there's many others. I don't want to go into the specifics of literally everything she wrote, but how important, what did that signal? How important is the shift at the SEC? Maybe one way to think about answering the question is frame for me what the possible most positive outcome could look like, because our audience and we in the industry know what the industry's asks are here. Obviously, it's to get clarity, and look, if you want to make everything a crypto asset security, then make a pathway for them to register and make a way for the crypto industry to trade them or broker dealers to trade them. All of that was in there of stuff they're looking at. You want things like in-kind redemptions and staking in the ETFs and a whole bunch of stuff, right? And she talked about all of that in an extremely, I think, bullish development, her statement, showing that basically the SEC is planning to work aggressively on everything that the crypto industry has been asking them to work on. How it all shakes out, we don't know. But frame for me in your mind the significance of that.
Well, look, I think obviously this is huge for the industry. This is good, right? There's no other way to put it, but I think we're absolutely going in the right direction. Broadly speaking, I think this is just showing you what SEC does best. And again, if you think about if you put this statement in the context and the fact that SEC is part of this President's Working Group, membership, right? The agency head is in there, and what essentially their role is to provide subject matter expertise. This is them establishing themselves as a leader in the space, as somebody who has experience in the space, and somebody kind of who knows on the regulatory side where we should be going. They're not saying we have all the answers. On some things, they're actually saying we're open to ideas, right? On some of the no action relief, they're saying we want your opinion, which in itself is a very positive sign for the industry, right? It's one thing to say here's what we think. It's another thing to say we are actively starting this process. It's the beginning of the road. We're going to be talking about these things. But FYI, we also know that this is the actual list, right? Not exhaustive, but here are the main kind of things on the menu here.
In fact, this statement will probably form the basis of their 30-day February 22nd submission back to the PWG. She's basically already cataloged what they think the universe of things that touch digital assets at the SEC is what she's done here.
Exactly. And then also, I think you can also glean, obviously it's her statement. It's not the statement of the commission yet, right? So just clarify that.
Yep.
But it's kind of giving you a glimpse of what they're thinking about, because remember, part of the President's Working Group task is also going to be voicing out the legislative recommendations, right? So the SEC's job is right now to go back to the drawing board. Not that they haven't been doing it. I absolutely know that there are staff at the agencies that have been already thinking about this, but also really clearly just articulating like what is it that's on the table that's within absolutely their purview, and what would they need congressional stakeholders for, right? So I think it's like a very thoughtful it's a very thoughtful statement that really reflects that SEC is already actively working on it. I think they're also trying to signal that, just because they don't have a confirmed agency head, they don't have a commission chair, right? Like that's fine. They're still going to continue doing work, and they're going to still continue to engage with the industry, with the understanding that they're also part of PwC.
That's right.
And this broader process.
Yeah, I think, and
so
just for the audience, I want to just read like flatly a couple of the things that she said really quickly, like, and a couple are in the top. She's this very thoughtful top portion before she gets to the specific list. But even in the top portion, there's some big takeaways. For example, she literally said the commission staff is working hard to process applications for exemptive relief, requests for no action letters, and registration statements. Okay, so those are asking for an exception, effectively, like from a rule, and or an enforcement or a no action letter is an affirmative statement by the SEC that they've looked at your project or ask, and they're going to formally say it's okay to proceed. And registration statements, those are things like companies going public. It could be tokens that want to register and disclose. They say, but the volume's proving likely to prove challenging. Basically, they're super busy. She even says at the end, being first in the door may not mean first being out the door. There's which is really like, so she's both saying, look, we are looking at this. We know that there's people coming to us. By the way, and I want to also point out, she also is very clear. The other things I'm going to say, all if they all went like in the most favorable way, would all be incredibly supportive of the digital asset industry. But she also makes it very clear. One of the reasons U.S. capital markets are robust, I'm quoting her, efficient and effective, is that we have rules designed to protect investors and the integrity of the marketplace, and we enforce those rules. We do not tolerate liars, cheaters, and scammers. So they're not saying they're going to give like a free pass, right? It's nothing like that. Like, so it's just saying like, and then here, okay, so here's another one. Consequently, she's talking about how like convoluted and and unclear the SEC's stance has been, effectively saying that they've been doing regulation by enforcement rather than putting forth like clear like guidance on these issues or building frameworks. She says, consequently, many cases remain in litigation, many rules remain in the proposal stage, and many market participants remain in limbo. Determining how to disentangle all these strands, including ongoing litigation, will take time. Again, she's not saying that the SEC is going to withdraw like the cases they have. But again, we predicted in November that they probably would halt, withdraw, or alter their stance in litigation. This is a signal that that's obviously something they're looking at. And then lightning round here, security status, scoping out. They're going to come up with it's likely that she thinks no action letters or other things will make things not within the SEC's jurisdiction. They're already coin and token offerings. They're talking about commission action to provide, quote, temporary, prospective, and retroactive relief for coin or token offerings. They're not saying they're going to do it. She's saying they're thinking about the possibility of recommending, right? So she's leaving it very open-ended for them to actually do the work to decide what they're going to do, but she's telling us point blank, this is a big thing we're going to look at, token issuance. And I note the point where she says even retroactive relief, which might mean things that we said were illegal or unregistered securities, we might go back and change that. So very interesting. Registered offerings, giving away to do registering token offerings, viable path to do so, right? Like special purpose broker dealer, which was I think there was, maybe they got two now, but at first it was just Prometheum. It was, regular BDs can't touch cryptos, but so you need this yet another license. She's straight up, she says an initial change we may suggest is that the statement may be expanded to cover broker dealers that custody crypto asset securities alongside crypto assets that are not securities, right? That's important because what if something starts as a security and goes to a commodity? Now me as the investor or the user, I have to move my account? Stupid, right? Crypto lending and staking, clarity on whether those are securities, ETFs, about whether they can stake in the ETFs or whether they should have in-kind create and redeem. These are all the types of things that crypto has been asking for. She's not saying they're going to decide exactly the way the industry might want, but she is very clearly saying that we are now going to take up the things you have been asking about. And
that's right. I think that's right. Yeah. I think it's very much it's the beginning of the journey. Everything's on the table, right?
And by the way, that's the title. The title of the piece is "The Journey Begins," is what she wrote. She's very poetic.
It's very poetic. I was going to say it's good vibes all around.
Yeah. I also just lastly on her in this statement, I want to also read one more thing she wrote that as, a pretty self-described libertarian as I've sort of been, not on every issue, but in general, I thought was just it was beautiful. She's a great writer, by the way. She's written tons of statements and dissents over the years, all of them extremely well written. I thought this was remarkable. She said, in this country, people generally have a right to make decisions for themselves, but the counterpart to that wonderful American liberty is the equally wonderful American expectation that people must, italics, must decide for themselves, not look to mama government to tell them what to do or not to do, nor to bail them out when they do something that turns out badly. That is incredibly fascinating free market capitalist theory that she's putting forth about the way America and regulators should approach the marketplace. What's your reaction to that statement, Natalia?
Yeah, I think she's obviously poetic. She's a great writer. I think it's a definite change of sort of tone at the top, right? Like that's one of those things that you can glean from all of these different changes in administration and how the tone is changing. So, writing statements and speeches is one of their tools. But I would also say like she's pretty careful in setting up some safeguards there, right? Like she's reiterating the mission of the SEC. She's saying we don't tolerate liars and cheaters. And she's saying we exist to sort of, mitigate market asymmetries, informational asymmetries in the space, right? Like we're here to enforce market integrity. So I think it's overall, again, like a huge positive for the industry. And in general, right, like that's how we approach other asset classes. That's how we
Right.
generally approach equities, right? Like I think there's conversations happening on the accredited investor space, like who should be considered an accredited investor, right? Like what are our thoughts on Reg A? What are our thoughts on crowdfunding? I think these are all fundamental questions, and obviously, like compare contrast, we're going to have very different answers in this administration as opposed to the last. But I think mostly I'm very optimistic about, again, is like the scope of the work that they're undertaking, because again, this is huge. Like it's like we talked about earlier, like there's only so much time, there are only so many people at these agencies, and the fact that they're just so aggressive and they're going at it quickly, right? Like it's only February 5th today, right? Like
Right.
I think these are all great signaling. It's all great signaling for the industry.
Okay, so this I agree, and I loved this statement, and I encourage people to read it. I think we'll write about it probably in our newsletter on Friday. So if you're listening on Thursday, go sign up gdr.email if you haven't. This statement may be the most obvious pivot from at an important regulatory body to the digital assets industry when looked at compared to, say, former chair Gary Gensler's tone and positions. But it was overshadowed on Tuesday in the market by this press conference that crypto and AI czar David Sachs held from the Senate Banking Committee, or a room in the Senate, with the chairs of both Senate Banking, Senate Agriculture, House Financial Services, and House Agriculture. All four committee chairs, critical ones to the digital asset industry, gave a press conference from the Senate about crypto and digital asset policy. What were your thoughts on that?
I know folks in the industry had a lot of thoughts on this. I think there were a lot of expectations. There was a lot of, press. There was a little bit of hype about this conference.
I mean, even just to put a fine point on that point, like Bitcoin rode all the way up from the post-tariff meltdown of 91.7 on early Monday morning to, by Tuesday afternoon, $101.5 thousand per coin, and then basically sold off back to like the 97, 98K range, like following it. I guess they thought that, these guys were going to swear the Pledge of Allegiance with their hand on the Satoshi white paper or something, or announce a $1 trillion Bitcoin buy. But yes, sorry, go ahead. That was the sort of frenetic market reaction, but what's your takeaways from it overall?
I would advise these folks, and I would plead with these folks to be a little more patient with us, right? Like we are, after all, Washington, D.C., right? It's like we talked about in the beginning. There are a number of priorities in front of these leaders. Again, everything from immigration to tariffs, they have to be tackling at the same time. I would say, look at it from the perspective of this way. They took time out of their days to come together, right? You got all of these senior folks from House Social Services, Senate Banking, Senate Ag, House Ag. They took time. They coordinated with David Sachs at the White House, right? Like they're putting their best foot forward in a collaborated, like coordinated fashion to say that we can walk and chew gum at the same time. Like, this is big, right? Like, it's only February 5th today. Inauguration was only last month, right? Like, we forget how quickly, like in crypto, we move fast, right? But government is just a very, very different beast with way many stakeholders to sort of satisfy and, pressing issues like passing the budget, right? Like, so don't forget that there's also like a March 31st deadline to fund the government. But apart from that, I think, again, this is all in all largely a positive thing. And what it told me is two things. Is one, they are committed to a legislative solution. And not only one legislative solution, but both, right? Like, I think a lot of times in crypto, we talk about which one goes first, market structure, stable coins. I think what they're trying to do is both, right? Like, and that's frankly being signaled by both on the Senate side with this Senator Haggerty bill that they talked about. And at the same time, they're like, you know what, this PWG DM process is going on, and they're going to come up with recommendations. We're going to stay coordinated and collaborative with them. We are willing to work together so that we can have a solution at the end. So to me, this is more of like, again, net very positive. If I could urge the digital asset industry to be a little more patient again, I think like that would be my main takeaway here. I know there were some expectations out of this conference, but, all in all, we kind of, we got what we kind of were promised for, right? That's the digital assets working group.
Bicameral, so
That's
both
right.
Senate and House there, cross committee, ag and banking / House Financial Services agreeing to work together, and across executive branch and congressional branch of government. I mean, it was a very, very strong show of commitment to work together across a range of ways. And in that sense, by the way, the fact that the entire thing was about crypto and digital asset policy, frankly, historic. I mean, a historic press conference. I mean, really amazing.
Agree. I think all in all, again, like if you think about, all these agencies, they have their own jurisdiction lanes, and all of these committees have jurisdiction lanes, and they don't usually like to share, right? Or it's just a harder coordination process. And the fact that they're coming together, they are saying like, we're going to work with the White House. We're going to work with the industry on this. We're starting robust outreach. And by the way, we're also not just like sitting here. We also have this draft legislation that we're reintroducing on the Senate side. I think these are all extremely positive.
Yeah. One thing I wanted to point out, and so when you raised in the beginning, was the digital asset stockpile.
That's right.
President Trump, as a candidate, first introduced this concept at his July speech at the Bitcoin conference in Nashville, when he said, as one of my final announcements while at that in that speech, I will create a national strategic Bitcoin stockpile. That's kind of how he said it. And then immediately following his speech, Republican Senator from Wyoming, Cynthia Lummis, announced and held up the Bitcoin Act, she calls it. Now, her proposal is to purchase Bitcoin on behalf of the government. That in the parlance of this industry and policy issue, we typically refer to a stockpile as merely holding the coins the government already has, whereas the reserve, again, just a shorthand, has usually meant going out and buying Bitcoin. At the end of the one of the things, this is what you mentioned in the presidential working group, is that they are ordered to examine the potential creation of a digital asset stockpile that potentially derived from coins the government has already seized. It did not order it did not say the word Bitcoin. It did not say the word Bitcoin reserve, and so that was a signal that some were disappointed about in the EO, particularly from the Bitcoin native crypto, the Bitcoin community, the Bitcoin maximalist community in particular. However, at the end of the press conference, David Sachs was asked about the stockpile. He was asked in the context of the news has been just a deluge, the Trump administration moving very quickly on a lot of fronts. But he signed an executive order earlier this week to create a sovereign wealth fund that apparently would be dually operated or examined to create it by Commerce Secretary Howard Lutnick and Treasury Secretary Scott Bessent. And in the context of that EO, Sachs at the end of the press conference was asked, would Bitcoin perhaps go in to that sovereign wealth fund? Would the sovereign wealth fund hold it, is what he was asked. And I'll read his exact quote in response real quick here, which just And then I want to talk about this with you. It said Sachs' response to the question, this is the last thing he said, it was in the last 30 seconds of the press conference. He said, quote, "I guess it's possible that the Sovereign Wealth Fund could decide that they want to make Bitcoin or digital assets part of its portfolio. You'll have to ask incoming Commerce Secretary Howard Lutnick about that. The item that President Trump asked our working group on digital assets to study is whether it's feasible to create either a Bitcoin reserve or some sort of digital asset stockpile. And so we're going to be looking at that question. We haven't committed yet to doing it, but it's one of the first things we're going to be looking at." He then went on CNBC an hour or two later and again said Bitcoin reserve or digital asset stockpile. To me, like that, the inclusion, I don't know what it signals exactly, but he was very careful. And by the way, I was quite impressed with David Sachs's formality and ability to be a representative for the White House. Not that I didn't think he could do a good job at all. I did think he could, but it's not like he's ever done this role before. And he was extremely
Washington is rubbing off on him.
Yeah, but I mean, that's what I mean. I have to think that he didn't just say potential strategic digital asset stockpile, which is the exact language in the EO. He said Bitcoin reserve or digital asset stockpile, making them two distinct concepts. At a minimum, recognizing and shouting out to, even if they, again, he's not committing, it's all potential. We'll see. We're studying it. But like that language to me on the Bitcoin reserve was very notable and clearly by choice. And he said it twice in a 2-hour period. Am I wrong to be looking like into it? Am I overthinking it? To me, that was very deliberate.
No, look. I think you're absolutely spot on. I think he absolutely understands the difference. He knows that the industry understands the difference and is watching this closely. So I think the emphasis here is on feasibility evaluation, right? That's how agencies generally start something like this, right? There are lots of operational considerations. There are lots of legal authority considerations that they have to think about. And so what he's thinking about is like, and they may study both, right? The feasibility.
It sounds like they are going to study both. I agree. Yeah.
And they may or may not, come out with a very clear-cut recommendation there. They may actually, I would not be surprised if it was me implementing it, if it was me actually writing it. I would absolutely address both and then lay out the pros and cons and then lay out what kind of congressional authority, what kind of legal authority, what I would need to make these things happen, right? Obviously, the actual reserve comes with some, money out, right? So there are budgetary considerations.
For sure.
So if that's something that that would need to be ironed out in the final.
Yeah, there's a lot of considerations. My takeaway too, I totally agree with you. And I guess my takeaway is like he's recognizing that these are two distinct ideas and he's saying they're both on the table. Like Correct. One way to frame this would be like, Bitcoin reserve is absolutely on the table still. Even though it didn't say Bitcoin reserve in the EO, he is very clearly saying it's on the table. They're going to look at it, and they're going to look at it quickly is what he said, too. So just throwing that out there, I thought that really stood out to me. Otherwise, broadly, I think, right, the presser is more like high-level, historic, great to see, continuing the trend that we've been seeing, that they really do want to work on it. It really is a priority. They do intend to collaborate, et cetera. That was all great. But I feel like this was, from a markets standpoint, that distinction, although, again, pretty nuanced. Like I said, he didn't, praise Satoshi and say we're buying $1 trillion of Bitcoin at this exact moment, take out the Cash App and instantly buy, right? It wasn't like which it seems sometimes that's what this frenetic market wants. And that's why. Yeah, because Bitcoin sold off. I mean, not like crazy, but like sold off after that ended. And I'm like, guys, I think especially for Bitcoin. I mean, it's great that he reiterates the stockpile. And by the way, the government currently holds like dozens of coins. I mean, it's probably 95% Bitcoin. They own a lot of Bitcoin.
You already have a bunch of stockpile, right? Like, effectively, you already have a stockpile.
Right, but to just throw in Bitcoin strategic Bitcoin reserve also, I think, is a nod to the fact that, frankly, like they might look at it. They might look at buying Bitcoin. They're probably going to look at buying Bitcoin as a possibility. And so I just thought that was really notable from the end of that thing.
I think you're right. I think it's also just, not only you have this collaboration coordination, but you also have folks in the room who actually know the difference and understand the difference. And at least a way to signal to the industry that, like, we hear you and we understand what the friction points in all these policy conversations are. We're looking at them, right? That doesn't mean you're going to get everything and that doesn't mean you're going to get it tomorrow. But as far as like government action goes, this is a sprint, right?
There you
For
go.
us as an industry, it's been a marathon. I think we're reaching this like final stage where, they're going to generate a lot of action.
Yeah.
And we should
There's
just
going to be a
patient
lot
with them.
more happening and to talk about. It has been a breakneck speed, not just on our stuff, but on everything that the administration is doing, moving very fast. Let's leave it there. We'll check in again at some point. Natalia Li from Galaxy's public policy team. Thank you so much, Natalia. That's it for this week's episode of Galaxy Brains. Thanks to our guest, Natalia Li from Galaxy's public policy team, and our friend Beimnet Abebe from Galaxy Trading, as always. Everyone have a safe and happy weekend, and we will see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.